What if the world's most controversial stock still has its biggest opportunity ahead? Some investors believe Tesla's best days are over. Others believe it's only getting started. So who's right? Is Tesla still just an electric car company? Or is it becoming one of the world's most powerful artificial intelligence businesses? Stay until the end, because one overlooked part of Tesla's business could have a much bigger impact on its future than selling cars. Why Tesla still dominates headlines. Few companies attract as much attention as Tesla. Whether it's electric vehicles, artificial intelligence, robotaxis, humanoid robots, or Elon Musk himself, Tesla is almost always making headlines. That's one reason Tesla remains one of the most actively followed stocks in the world. But despite all the attention, many investors still struggle to answer one simple question. Is Tesla actually a good long-term investment? Tesla is more than an EV company. Most people think Tesla only builds electric cars. But Tesla's business has expanded far beyond automobiles. Today, the company operates across several fast-growing industries: electric vehicles, energy storage systems, solar energy, artificial intelligence, full self-driving technology, robotics. Each of these businesses could contribute to Tesla's future growth. That diversification is one reason many investors continue watching the company closely. Artificial intelligence could change everything. Artificial intelligence has become one of the biggest technology trends in the world. Tesla is investing heavily in AI to improve full self-driving software, vehicle safety, manufacturing efficiency, robotics. Its AI systems analyze enormous amounts of driving data collected from vehicles around the world. Supporters believe this gives Tesla an important advantage as autonomous driving technology continues to develop. Whether that advantage leads to widespread commercial success remains one of the biggest questions for investors. Beyond cars, energy and robotics, Tesla is also expanding its energy business. Large-scale battery storage systems are helping utilities and businesses store renewable energy more efficiently. At the same time, Tesla continues developing its humanoid robot, often referred to as Optimus. If robotics eventually becomes a major commercial business, it could open an entirely new source of long-term revenue. Although it's still early, many investors are watching these developments closely. But here's what most investors miss. The biggest question isn't whether Tesla sells millions of electric vehicles. It's whether Tesla can successfully transform itself into a leader in AI, robotics, and energy technology. If that happens, Tesla's future could look very different from today. But if those ambitions fall short, the investment story changes dramatically. So, can Tesla justify its valuation in 2026? That's exactly what we'll answer next. Is Tesla stock too expensive? Now let's answer the biggest question. Tesla has been one of the stock market's biggest success stories. Because of that, many investors ask the same question. Is Tesla stock already too expensive? The answer isn't simple. Tesla has often traded at a higher valuation than many traditional automakers. That's because many investors don't value Tesla as just a car company. They see it as a technology company with exposure to artificial intelligence, autonomous driving, energy storage, and robotics. Whether that premium valuation is justified depends on Tesla's ability to keep growing beyond vehicle sales. Tesla's biggest growth drivers. So, what could drive Tesla's future growth? First, artificial intelligence. Tesla continues investing in AI to improve full self-driving technology, manufacturing efficiency, and future autonomous mobility. If self-driving technology becomes commercially successful, it could create entirely new business opportunities. Second, energy storage. As renewable energy expands worldwide, demand for large-scale battery storage could continue growing. Tesla's energy business has become an increasingly important part of the company. Third, Optimus robot. Tesla is developing a humanoid robot designed to perform repetitive tasks. Although still in development, some investors believe robotics could become a meaningful long-term business if the technology proves commercially viable. The biggest risks investors should know, of course. Every investment carries risk. Competition in the electric vehicle market continues to increase. Traditional automakers and newer EV companies are introducing more electric models every year. Tesla also faces execution risk. Developing self-driving technology, robotics, and new AI products requires significant investment, and commercial success is not guaranteed. Government regulations, global economic conditions, and changing consumer demand could also affect future growth. Because of these uncertainties, Tesla's stock can experience significant price swings. Should beginners buy Tesla? If you're a beginner investor, avoid buying any stock simply because it's popular. Many experienced investors first build diversified portfolios through broad market ETFs. Then they add individual companies they believe have strong long-term growth potential. Tesla is often considered a growth stock. That means it may offer significant upside, but it can also be more volatile than many mature companies. Diversification remains one of the best ways to manage investment risk. Final verdict. So, is Tesla stock still worth buying in 2026? If you believe electric vehicles, artificial intelligence, autonomous driving, energy storage, and robotics will continue expanding over the next decade, Tesla remains one of the most closely watched companies in the world. Will it repeat the extraordinary returns of its early years? No one knows. But Tesla continues pursuing ambitious technologies that could shape multiple industries. The smartest investors don't invest based on hype alone. They study businesses, understand the risks, think long-term, and stay diversified. If you enjoyed this video, subscribe to Wall Street Pulse for more analysis on Tesla, Nvidia, Amazon, AMD, Bitcoin, ETFs, and the US stock market. And in our next episode, we'll compare two iconic companies, Apple versus Tesla. Which stock has the better future?